Hi guys, I welcome you once again and trust you are doing great. So if you are new here, I go by the name BY Samuel and I welcome you to the BY class where we make fundamental lessons more simpler and easy to understand. So yes, you are at the right place. So stay tuned and don't miss an upload. So in today's lesson, we will be tackling the topic accounts and ledgers. Accounts and ledgers. And our objectives for the day is that at the end of the lesson, you are expected to understand the meaning of accounts, the types or classifications of accounts, meaning of ledgers, and also the types of ledgers. But this session will be divided into two parts where we take the meaning and types of accounts first. In the second session, we take the meaning and type of ledgers. So stay tuned, get your notes ready, and let's get started on rewriting the stars. So one may ask, what is an account? An account is a ledger record of all the transactions that have taken place with a particular person or value specified. What this means is that the record which has all the transactions between a business and a particular person is referred to an account. Is referred to as an account. The ledger record of all transactions that have occurred between a business and a particular person is referred to as an account. Now, the person that is made mention here does not only refer to individuals in business or in financial accounting. When we make mention of persons, we also refer to it as organizations. So, the persons here is referring to individuals as human beings and also business organizations or entities. So just take note of that. So any ledger record that has all the transactions between the business and a particular individual or a particular business is referred to as an account. And then also sometimes it is not only to persons, but it is only also referring to value specified. So something like the example that is given, motor vehicle account. So the motor vehicle that is within the business, that maybe it is used to run the business, maybe go for stock from somewhere, all those things, how the motor vehicle is being used. When all these records are penned down or they are laid or showed within the ledger, it is referred to as an account. Let's go at the additional information. It says that account is a historical record of the item or persons whom the business deals with. So just as I said, so the record that that makes that brings out all the transactions between the business and then also other persons or items is what we term as an account. It's what we term as an account. So now let's move on to the types of accounts. And we basically have two types of accounts or two classifications of accounts. The first one says personal accounts. And this type of account is used to record transactions of persons and business organizations. Transactions of persons and what business organizations. So the word says personal. Personal, this one we are referring it to a particular person. Personal, so like something that belongs to someone. And I told you earlier that persons here refers to individuals or business organizations. So in this case, we are looking at transactions of persons or business organizations. So example, when someone comes to purchase an item from you on credit, the person has come to purchase from you on credit. That means the person has come for the items and will pay later. So such a person, if you are a business and you want to record his or her transaction, just so that you'll be able to remember that this particular person is owing me, when you write the name of the person in your books, and you are recording those transactions, that is what we refer to as an account. So when you also go and purchase an item from someone or a firm, and then you also didn't pay for it at the moment, in order for you not to forget who you are owing, and so that you'll be able to get or trace the exact amount you are also owing the person, you have to create an account. And that is the person we are referring to here as a creditor. That is what we are referring to here as a creditor. In the next one, or the next example given, capital account. Capital account. And then here, if you remember, there is a principle in business or in accounting that says the business has a separate legal entity. So the separate legal entity makes us understand that the business is separate from the owner. So whatever money or whatever thing that the owner used to start the business, he or the owner is not known as the business. The business is separate from the owner. So when the owner introduces money into the business, it is identified as capital. So because it's identified as capital and it is representing the owner, it is also what? A personal account. It is identified as capital and it represents the owner. So it is what? A personal account. It is standing in on the behalf of the owner. So that is it for personal accounts. There are more. We will be having examples in, so just stay tuned. Now we come to the impersonal account. The introduction of the im there makes us understand that this time around we are not referring to persons, but we are referring to other things. It can be items, it can be services, it can be whatsoever. So this time around, any transaction that is recorded but not referring to a particular person, but it is referring to items or relating to items, is what we term as impersonal accounts. And because it is with a because it is not referring to persons, we have some of them which are tangible, we can see. Others too might be services, and services are things that we cannot see. So in this case, we have classified or we have grouped the impersonal account into two types again. And the first one is real account. The first one is real account. So the real account is used to record the tangible items, the ones that we can see and touch. The ones that we can see and touch. So something like land and building. So the land on which the business is on and the building in which we are doing the business in. We create an account for it for us to know the 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 amount at which the land is valued. Definitely the owner that didn't stand up and then called land to come, called building to come, and then the building just appeared. You get it? It was purchased. So that because it was purchased and then if we can see and touch it, we refer to it as what? The real account, because you can see and touch. The things in which the business does. Maybe the business sells a commodity. So let's say it is a beverage company. So the beverages which is found within the business or the organization is referred to as the stock. So just for us to be able to trace the amount of commodities or stock we are selling and then the amount we are purchasing inside again and all these things, we create a stock account. A stock account. And then the plants and machineries that we use in the production process, we create an account for it. Maybe there were damages, we went to repair, we went to buy a new plant or a new machinery. All these things, then we create an account for it and we record it as a real account because we can see and touch. Now when we come to the ones that we cannot see and touch, we refer to it as the nominal account because we cannot see or we can yes, we cannot see or touch it, but then it is something we do. So something like expense. or a loss. When the company runs at a loss, it is not seen. And because it is not seen, we record it though, but we do not see it. So we refer to it as nominal account, because the loss is not something that is a human being or it is something that we can touch, but we know we've run at a loss. Expenses too, when we go, when we make expenses too, it is something we know we've made an expense, but it is not something we can see and touch. Revenue. Revenue are the things that the company, the sales the company makes within a particular period or even a day. So the total amount of sales the company makes. So when the company makes the sales and then gets that money is to, we create an account for it. And because we do not see nor touch that sales, we record them in the nominal, or we record it as a nominal account. So the nominal account is used to record expenses, losses, revenues, or gains. So let's take examples or trial questions so that you get the better understanding of the types of accounts. So we would first of all have to identify the people involved in the transaction before you can classify what type of account it is. Because in every transaction, we believe that there are two people involved. In every transaction, there are two people involved. So because there are two people involved, we have to first identify the people. Then when we identify the people, we look at it and see whether it is a person that we are referring to, or it is an item that we can touch, or it is a service that we cannot see or touch. I hope that is clear. So in our first example, we have started business with check. Started business with check. So let's identify the people involved in this. Now, who is starting the business? The owner. And we said whenever the owner introduces something into the business, it is referred to as capital. So if they are telling us started business with check, that means there is a capital account in this case. So we create a capital account. So we are representing it with a C here. And then the very moment you hear check in accounting, we are referring to bank. So we create a bank account as well. So now let's look at which type of account these ones are. So now the capital, which is the first one, we know it is referring to the owner, and the owner is a person. So because of that, the capital account becomes a personal account. And then with the bank, the check is something we can see, and we can also touch the check, the paper. We can touch the check, we can see it as well. So because it is tangible, it becomes a real account. It becomes a real account. I hope this is understood. Now let's move on to the next transaction. The next transaction says paid wages. Paid wages by cash. So let's identify the people or the items involved. The first item here is wages, because we are paying the wage. It's wages. And then the second item we are seeing here is cash. Cash. So yes, cash. So the wages here, you see, it is a service we are providing. We are paying the people their wages. And the wages to the business, it is going to be an expense to the business. So because the wages is going to be an expense to the business, it becomes a nominal account, because nominal account records expenses. And wages here is going to be the expense of a company. So it becomes a nominal account. And then cash here, we are paying them by cash. The cash is something we can see. The cash is something we can touch. So because it's something we can see and touch, it is referred to as a real account. It is referred to as a real account. I hope this is very clear. Now let's look at the third transaction. The third transaction. The third transaction. Now the third transaction says it says sold goods to sold goods on credit to Maya. Sold goods on credit to Maya. That means we've sold the things to Maya, but we've not taken our money from Maya. Okay. So because we want to trace this particular thing or this particular transaction, and it is selling we were doing. So because we are selling, we create sales account. Sales account. Because it's a selling we are doing. So we create a sales account. And who were we selling to? We're selling to Maya. So we create Maya's account as well. So now the sales. Because it is a selling we are doing, at the end of the day, we are expected to receive something. So sales is the revenue for the company. Sales is the revenue for the company. And we said revenue is also identified as a nominal account because it's a service we are providing. It's a service we are providing. So sales account is recorded as a revenue, and revenue is a nominal account. Revenue is a nominal account. Now Maya's account. Maya's account. Maya is an individual, and for that matter, it becomes a personal account. I hope we understand. Now the fourth transaction. The fourth transaction says took check for personal use. Took check for personal use. Now, taking check for personal use, we let's identify the transactions. Check here refers to bank, and then personal use. Now, this means that when the owner introduced money into the business, we say he has introduced capital into the business. Now, when he takes money out of the business, because he is not part of the business, he is separate from the business, we have to record that one too as well. And in accounting, when the owner takes money from the business and does not use it for business purpose, but use it for his own purpose, we record it as drawings. We record it as drawings. So already we saw in the first transaction that bank is a bank is a real account because the check can be seen and touched. So now let's look at the drawings. Who is the drawings going to? It is going to the owner. It is referring to the owner. So because it is referring to the owner, it is referred to as a personal account. The drawings is referred to as a personal account. I hope this is clear. Let's move on to the next example, and then that is bought a computer from Toshiba Limited. Bought a computer from Toshiba Limited. So now you can see we've bought a computer and they've told us what we are buying. So because they've given us what we are buying, we don't record it as purchases. It is only when they tell us bought goods. If they say bought goods, we create a purchases account because they didn't tell us the particular thing we are buying. But the very moment they tell us the particular thing we are buying, we record the name of that thing that we are buying. And in this case, we were buying computer. So we create computer account. We create a computer account. And who were we buying from? We were buying from Toshiba. So we create Toshiba account. We create Toshiba account as well. So let's look at uh, the types of accounts these two were for. So computer is something we can see and it's something we can touch. So because we can see and touch, it is a real account. But Toshiba here is referring to the business or the company called Toshiba Limited. The business or the company called Toshiba Limited. And we said persons in accounting refers to individuals or business entities. So this one becomes a personal account. I hope you are getting the entire thing. It becomes a personal account. So that is, yeah, the last but not the least. The last but not the least, received a loan from GCB by cash. Received a loan from GCB by cash. So now we are receiving a loan. If they didn't tell us who we are receiving the loan from, then we just write loan account. Loan account. But because they've told us who we are receiving the loan from, we will write the loan and we will put a hyphen. Then we will indicate the person we are taking the loan from. So it will be loan hyphen GCB. That means GCB is the one giving us the loan. Okay, GCB is the one giving us the loan. And how was the GCB bank giving us the loan? It was giving us the loan by cash. By cash. And already from the previous transaction, we know cash can be seen and touched, so it is a real account. Now the loan, GCB. GCB here is a bank, and because it is a bank, it is an institution or a business organization. And here we know, or we've come to the understanding that business organizations are also persons, so it is a personal account. I hope you've gotten an understanding of the types of accounts. So that is it for types of accounts and what an account is. How to identify them. You first of all look at the parties involved. When you finish, you look at the particular party and you consider, is it referring to a person? Is it something I can see and touch? Or is it an expense or a revenue? And that is it for the types of accounts, or the accounts and their types. So we've come to the end of today's lesson. Our next point, or the continuation, is ledgers. The continuation is ledgers. So get ready for our next video. Once again, my name is BY Samuel, and this is the BY class. If you find the content useful, just click the like button, put all your questions in the comment section, and share for us. Share the link. And then finally, subscribe so that I don't lose or miss an upload. Bye.